We are here and live again. I'm so happy to see you. Hey, look at this. You guys have any of those 11 crinkle cuts in your forehead? Let us know. We'd love to hear it. It's all going to be medical talk here and weird oddities and deformities that's going on with our bodies as we age and we get older. I'm so happy to see you. My God, you came back. I knew you'd come back. Whether you're live or watching on replay, hey, I'm Russ. Thank you for swinging on by, giving me a little bit of your time. Going to be an interesting video, and this stems off of a conversation I had with the one and only Dave from the Passive Income Podcast, and I linked to that in a post I did. So during our conversation, Dave mentioned, who is, by the way, he is from the Great White North, all the way up there in good old Canada. So he's from Canada, right? And he said he invests in a ETF, DFN.TO, and it has a 16.33% yield. And I had never heard of this at all. And I asked Dave, I said, Dave, hey, so what companies are in it? He went through some of the companies, which we'll take a look at here. And by the way, I do want to know if I can get this going here. Look at this. Bam, we got a ticker scrolling across the bottom. So this is going to be, I want to know if you've bought any ETFs lately, but we were talking about this DFN.TO as I'm trying to share the screen here. All right, come on, baby. You can do it. You can do it. You can do it. Here we go. So a little embarrassing. All right, here we go. We were talking about this right here, this DFN.TO. By the way, how's my audio? I turned it down a little bit, adjusting it. I know this is embarrassing, but let me hear myself. So, all right, I'm good. You heard me. Anyway, hey, those of you just joining us, my voice is going already. But not my singing voice, baby. We can always sing. Like Ozzy Osbourne, you can't understand the guy when he speaks English, but when he sings, baby, if he would just sing all the time, we'd understand him. So back to DFN.TO. It's the Dividend 15 Split Corp. By the way, in the show notes, description, whatever you call it, I have the link to the fund information, kind of their prospectus, and the annual report if you want to give yourself a little bit of insomnia relief and try to, I guess it wouldn't be insomnia relief. Insomnia relief would be if you're sleeping. Trying to cure your insomnia. Maybe that is right. I don't know. Anyway, so we check it out. As you saw in the thumbnail when you came in the door, it has a 16.33% forward dividend yield. So really interesting because the companies that they invest in, well, we'll get to that in a second, but he didn't know how they got that 16.33% because there's 15 companies in there and none of them pay a 16.33% dividend yield. So my initial question was, and this is something you should always ask when looking at really high dividends, especially in an ETF, is to say, hey, if they're paying 16.33%, but none of the companies that they hold are paying 16.33% dividends. And in fact, the highest yielding dividend stock, because I did the average, was 6.15%, which was BCE. That is the telecom stock up there in the Great White North of Canada. And with that, the average is 4.09% when I took the 15 holdings that they have in this DFN.TO. So where are they getting to that 16%? I did a little digging and we're going to take a quick peek at this. And again, this is really quick. I'm not an expert, not financial advice. I'd love to know your guys' opinions. Shamir, if you're watching, let us know what you think. But I wanted to start off with the historical data of their dividend. So dividend only, we'll see that it is currently, am I looking at the dividend? Why isn't that showing me? Oh, I know what I did. Here, time period. I want max. This is what I want. This is what I want. There we go. That looks a little better for all y'all. Thanks for joining us again. So they pay 10 cents a share, and they have paid this pretty consistently. We scroll down, it's not changing. The dates are changing. 10 cents per share every month, July, August, September 2015. They have paid that consistently. Let's go. Come on, work with me. It's been a long time. It was 30 cents a share in January 05, and then February 05, they dropped to 10 cents, but they haven't missed a payment. It has always been 10 cents a share, which is interesting. Now, let's stop sharing that screen. And did somebody say Canada? It's like, no, what's he going to do? That's right. Yes, Canada. Canada. It's refreshing. I love Canada. All right, here we go. So stick with me here while we go through this for all you people. This is what they're doing. They're writing call options. And it will show you all of the call options that they have done in the annual report. So this is where they're making up the extra difference from. Now, let's go to the next slide. So these are the holdings of DFN.to. So Shamir, you'll probably be familiar with most of these, or anybody up there in the Great White North. That's America's hat, baby. You guys up in Canada, you're the hat of America. I don't know, what kind of hat are you? Hopefully not a trucker hat. There's nothing wrong with trucker hats. I don't own them, but anyway, so the highest rated or the highest weighted is Royal Bank of Canada, Toronto Dominion, TC Energy, Bank of Montreal. All these are Canadian companies, and they have a little bit of cash, 9.6%. So currently cash is their highest weighting in this portfolio. And their distributions have always been rising. Not always rising, I'm sorry. The accumulated total dividends, they have Class A shares and preferred shares, $24.30 since inception on the Class A shares, and $9.35 on the Class B shares. So, yeah, just something interesting to watch. And really quickly, bear with me here. We're going to go through some things I picked out of the out of their fund information, things that are important. And this should show you that there's always something to learn when you're investing, and especially in these ETFs. Really high yields to me mean really risky. And in this case, they seem to be making it work, but there's a few peculiarities that stick out with this. So first and foremost, with this DFN.to, I think it's pretty crazy that the company was scheduled to be terminated on December 1st, 2009. Every 5 years, the company is scheduled to be terminated, but they get extended. So we see here in December of 2014, they extended it to December 2019, and then it was extended again. So they're scheduled to be terminated on December 1st, 2024, unless they get, unless there's an extension. And really quickly, the preferred shares rank in priority to the Class A shares. That's something that's pretty common among stocks. The Class A shares, they're providing, again, 10 cents a year, 10 cents a share per month. And then there's a special year-end dividend if anything's left over, from what I can tell, the last day of November each year. Follow with me, stick with me. We've got a few more to get through here. The preferred share pays 0.04583 cents per share. And the A's, again, is that 10 cents per share. And if you're, a nut job and you want to go through this by yourself, again, there's links in the description below. Interestingly, I don't know what this means. If anybody's watching knows what the annual retraction right means, that you can retract a preferred share or a Class A share on the August retraction date. There was a whole bunch on that. Didn't familiarize myself too much with it, but that's a weird peculiarity that I had never seen before. And then again, here's how they're getting that percent yield. Again, when you see ETFs and they have a 16% dividend yield, but none of the companies in there pay even over a 7% yield, that's coming from somewhere. A lot of times it's with leverage, or it's by using derivatives, options contracts, which is what it looks to me like they're doing here. They're writing covered call options. And they say right there, the company will write covered call options with the objective of increasing the yield on the portfolio beyond the dividends received on the common shares in the portfolio. So always key. That to me tells it's risky, but they've been making it work. And if you're watching Shamir or even on replay, what is the DFA? Because it says when it's not clear whether the writing of covered calls, if coupled with other transactions, could be considered to be DFAs. I'd like to know that. Again, they're saying they use derivatives, but they're not for speculative purposes or for leverage. So I think that's interesting. And in addition, this is something I experience with writing call options, covered calls, is that the company will not participate in any gain on the common shares that are subject to outstanding call options above the strike price. And I'm blocking it a little bit here, but if the company is unable to purchase a call option that's in the money, then they're going to be limited on the upside, and that could affect the value of the fund. And just a couple more here. I got like 3 more slides. In the event of the decrease in the value of a company's underlying investment shares in the portfolio of the companies, this leverage works to the disadvantage of holders of the Class A shares. This was in the risks. I think this is interesting because they say if the net asset value per unit is less than or equal to $10 plus accrued and unpaid distribution on the preferred shares on the termination date, the Class A shares will have no value. I found that interesting. And a couple more things that just popped out. When I see margin futures contracts, dude, that tells me it's a little bit risky. And always know there's fees. There's always fees. You're always going to have to pay the piper. This was interesting because Quadravest runs this DFN.TO ETF, and it says that there's an administration fee monthly of 0.1%, and then there's a service fee to each dealer who's a client. So this got a little confusing, but there's a service fee paid at the end of each calendar quarter that's equal to 0.50% of the Class A shares. And then again, they're entitled to a base management fee payable at an annual rate of 0.65%. And then they also are entitled to a performance fee of 20%, which again, you can get into this stuff and you can really get lost in the details. And of course, they have to say there's no assurance that the company will be successful in meeting the dividend capital repayment objectives. So that's it. That's all I got. I thought that was really interesting with good old DFN.TO. So I'd love to know if you have any experience with this ETF. Are you like Dividend Dave? Right now, if you'll come with me and be so kind, we're going to look at some recent news here that I'd love you guys to comment on. And I will get to the comments and just bad voice COVID. No, baby, that was just a little bit of yuck in the throat. So anyway, you're distracting me. I'm trying to get on with my gosh. All right, here we go. So there was some dividend hikes, dividend raises, and whatnot. So we're just going to go down the list here from good old Simply Safe. I'd love to know. I own this stock. AbbVie raised their dividend by 5%. And by the way, let me know if that was too much. I debated on sharing this, but I figured, hey, at the very least, you guys will at least think about when you see a really high yield on an ETF that you should question where that's coming from, especially if none of the dividend paying companies paying distribution that high. All right, here we go. AbbVie, 5% dividend increase, 4% yield. They came down a little bit in share price this week. And dude, check that out. Since they were incepted and they were spun out of Abbott, they've increased their dividend over 250 friggin' percent. That's pretty wild. I love that. Exxon, dude, they're gushing cash. They raised their dividend 3.4%, gives them 40 years of dividend growth. I think they had almost as much profit as Apple did this past quarter, which is nutty, but that yield 3.29%. So as the share price is going up, that yield is coming down, but still pretty healthy. Rockwell, they're an electrical component company. They raised their dividend 5.4%. 20 years, they're headed toward being a dividend aristocrat. Only a 1.84% yield, though. What is this? There's a couple more. Note on MPW, which has a 10% yield. Remember, for me, higher the yield, higher the risk. Kimco, that's a retail REIT, increased their dividend 4.5%. And look at these guys, dude. They've been going gangbusters raising that yield from every quarter. They've been raising it since March of 22. So that's pretty interesting that they're raising that. VF Corp, hey, my guy Harris was happy to see this. They increased their dividend 2%, and that yield is just looking stupid at 7.22%. But I think they're going to have They're going to have problems, but I think it's interesting. That's what I was trying to say. And I think that's all of them. What else we got? Yeah, they think they're iffy if the ACI and Kroger is going to go through because of how big it would make them. And I think I'll just do this one. Black Hills. They're a dividend king, I believe, and they raised their dividend 5%. They're out there in Wyoming, and I think somebody out here was from Wyoming out that way. Okay. What do you guys got for me here? Let's, yeah. So, yeah, I want to know, have you guys bought any ETFs? Let me stop this ticker. Or did you buy, I don't know, have you bought anything? What have you bought? Maybe we could do that. Let me know. Look at this guy. They're like, what is he doing? He's throwing things up and on the screen and out. What do you want to look up? And, let's see. Oh, here we go. Beautiful. Of course, KC, always in the house. I love it. Redemption rights. They can force a sale of the shares back to the company at a set price under set conditions. Cool. Thank you for sharing that, Casey. I did not know that. You know, I got to say, dude, Casey is a very, very educated young lady that's awesome. Every time I talk with her, I'm learning something. So it just goes to show that, you know, no matter how young somebody is, well, actually, somebody always has something to teach you. I don't care who they are. It's pretty much up to you to find out what that is. But, yeah, that's interesting. I wasn't aware of the retraction rights. So, yeah. And, yeah, when it terminates, when DFN.TO, if they were to terminate, I guess that they would have to liquidate everything. And then the preferred shareholders, I think, are first in line in the pecking order. And then the Class A. But I don't know why they do that, why they have the company scheduled for termination every 5 years. Again, if anybody knows that, that's crazy. I don't know why they would do that. There has to be some method to the madness. But I would assume that everything would be liquidated and there would be cash returned to everybody, again, based on the pecking order, the preferreds first, and then the Class A's, right? Yeah, Steve. There you go. SCHD. I was going to mention them. So Steve bought DIVO, SCHD, VYMI, and VGK. That's the Vegas Knights, actually. VGK. That's their abbreviation. I don't remember what VGK is, quite honestly. You know, I can only remember about 833 tickers off the top of my head. But let's see here. It is the Vanguard FTSE Europe ETF. Nice. VGK, okay. $50. 4.11% yield. I don't see what they're invested in. Their major holdings. No. Cool. Cool, Steve. I like it. DIVO and SCHD, I do own both of those, and I like SCHD. Now, that's one that's interesting. They're pretty much just paying the yield that the companies pay in aggregate, from what I understand. They're not leveraging anything. And, you know, does that make you guys worried if you would see something like a DFN paying 16.33% and the average yield is 4.09% of the companies that they hold? At least their 15 core holdings. Phil, there you go. Phil's up there in Canada. Phil is in Canada. Let's see. 3M went up by 8% this week. It's good to see it back up instead. Yeah, most of the industrials, I do believe, were going up except for LyondellBasell from what I saw this year. And, you know, I seem to be attracting a lot of Canada. Just Canada people. I love Canada people. They're great. I don't know. I'm sure everybody in Canada is not great. Just like, you know. Let's see. There we go. I like it. I knew. Leave it to Caitlin. This is my wing woman on the show. On DFN's prospectus, if an extension is not approved on termination, preferred and Class A shares are both paid out, their issue price followed by a special payout, Class A of leftover any assets. Hey, I guess that was along, kind of on the right lines. So, sorry, this to be loud. Just a little bit of my Waterloo, by the way. This is not sponsored by Waterloo. But yeah, I don't know. What do you guys what do you want me to look up? Somebody shoot me something to look up. I know Caitlin's been buying FRG, which is who did they own? Not Vitamin Shop. Who did FRG own? That was an interesting idea. Very high yield. And like she says, it's not for the faint of heart. Franchise Group, they do own Vitamin Shop, Pet Supplies Plus, Badcock, American Freight, Buddies, and Sylvan. That is an interesting company, and they do pay an 8.38% dividend yield, and she's confident in FRG. Yeah, she's been buying them hand over fist. And let's see. Let me put them into, let's see if I can, while I'm talking here, pull up Seeking Alpha. Here, you guys can come along with me while I do that. Just see what they have they got to say about them there. What are you guys doing for Halloween? Anything interesting? Well, this is a nice slow load we're looking at. Let's see. FRG Franchise Group. Caden. I was going to say KC. They're Seeking Alpha says they're at high risk of cutting their dividend. You can't argue with Seeking Alpha. Obviously, she knows I jest. So, interesting. Yeah, grade valuation of an A minus. Nice growth, B plus. So there's some people, a lot of strong buys, a few analysis, not a huge amount on here. And why is it so small? But yeah, so we got some strong buys there. I don't know what I'm looking at. Revenue, dude, yeah, up and to the right. They're definitely, this is what I love this. We get to see things like this that people are selling. Wait, what did I go by? Earnings per share, the estimates. Average has been going up. Earnings was hit in fiscal quarter one of 2022, but then jumped back up. That's interesting that they had that big drop. Hey, what's their payout ratio at? Let me see. I wonder if I don't know if. Here, let me share my old standby here. Let's see. Yeah, Casey says they're stupidly undervalued, horribly misunderstood, likely a triple in 3 years or less. Okay. Yeah, and then Phil, then I'll get, you guys. Gary, what's up? G-Man. Cisco. You're not late, Gary. It was interesting. I don't think this is too many people are going to get interested in, me showing, and this is the danger, is how to give information that's probably boring, and I, leaf through that prospectus, the fund information in like 30 minutes. And I was just thinking dude, this stuff is really, really boring, and most people probably don't care, which I expect, but I wanted to throw it. And anyway, what was I saying? Yeah, we're going to share Simply Safe for Franchise Group. Let's see here. Sorry, I'm jerking your eyeballs around, everybody. Let's see their dividend. So I'm guessing they are newer, or did they just start paying that dividend in 2014 maybe? But interesting. They have 56% hike in their last full year, and $2.50 per share. What are they at for share price? Not that matters. Obvious, $29. So share price and value are two different things. So Casey has a very, very high valuation on FRG, which is why she's buying hand over fist here. And that's something I'd like to get a little better at. And I'm slowly learning to value things more appropriately. But looks like they might be due for a dividend hike here if they will. soon. But yeah, free cash flow payout ratio, only 2%. Very, very low. I mean, that's stupidly low. That's nothing. 2%. Are you kidding me? 13 cents per share. Not bad. Free cash flow per share. So that's interesting. 13 cents per share. Am I reading that right? Yeah. But they're paying $2.50 annually. So I'm thinking it looks like, I don't know if these numbers are accurate. And this is sometimes the problem with looking at third-party sites like Seeking or Simply Safe Dividends. Sales, 4 billion, 41 million. So they've been increasing shares a bit. Does that worry you at all, Casey? I guess you know the company. My question would be, why are they increasing shares pretty dramatically, I think, in the last few years? And let's see their debt, 76%. That's a little bit high debt, but if they're an only 1.38 interest coverage ratio, again, this is just taking a very, very quick look at that. So let me go through a couple others for you guys while we'll circle back to that. So Phil wanted to look at Cisco, which I want to sell a covered call on, and I may do that this week. Are we off to the left, Cisco? 91 dividend safety score, 3.33% yield. We'll just look at a couple metrics. We don't want to bore people to death, to tears. Yeah, 2.7% hike, but they've been growing it nicely, man. They have a 11-year uninterrupted growth streak, and they've also been paying that dividend for 11 years straight. 18% 10-year CAGR. I like that. $1.52 per share per year. And where are we at? Probably one more payment after this month, and then they'll do a hike. And this is something I like to look. Just a really easy baseline is looking at the timeliness. They have a 12% dividend. Their dividend yield is 12% above the 5-year average for Cisco, and the forward PE is below. But I think their payout ratio, only 49%, which has ticked up a little bit. And I do believe they are buying back shares. They still are, and pretty decent sales. So I like Cisco. What else did I see from you guys? I think I saw, Gary wanted to see SLG. Let's pop on SLG for you, Gare. Gare Bear, is that too presumptuous? Do we not know each other well enough yet? By the way, cheers. Today is the last day of Sober October. Well, today is the last day of Sober October. My wife and I ended on Halloween night. Theoretically, didn't make it the full time, but you know what? Screw it. Close enough. It's my life. So I do what I want. 60, borderline safe. Dude, SLG, 9.47% yield. I don't know what they do, but I do know now they are Manhattan's largest office landlord. That would make me a little bit concerned in office spaces, unless they're going to start converting office spaces into apartments or condos or, residential. That's interesting. But just see what their dividend did real quick. They haven't really grown it that much, only a 4% 20-year CAGR with some cuts, obviously, during the great financial collapse, GFC, right? They call it. They haven't raised that dividend in a while, but they do pay every month. So take that back. They did raise it. That might have been a special dividend they paid there or something. I don't know. Anyway, right there, special payment of $2.51 per share. And I don't know. I don't know why. I don't know enough. Let's see if their sales have been down, but that dividend yield is 106% above the 5-year average. And let me know, do I take too long on these? I would like to go faster. I want to get everybody in. They're at the low end of the 52-week range. So they definitely are on sale. But their adjusted funds from payout ratio is 94%. That is a bit high for my liking. $5.22 free cash, but the adjusted free cash, adjusted funds from operation per share, $3.95. And their sales have been abysmal since 2017. So, but they're buying back shares. That's interesting. Usually REITs will increase the shares to, I don't like that, dude. Their sales are declining. Their return on invested capital is declining. That's only at 47%. So I don't know. I'd probably just, I wouldn't feel too comfortable with this. I know you might be looking at that high yield, but let me look at some comments here. Yeah, I don't know, dude. SLG, Cisco, I like. I'd still be okay with Cisco, but SLG, I see that office, and just like I hold Orion office properties, which is what was shed out of Realty Income, and after they merged with Verit, and I should have dumped it early on, but I only have a few shares. And yeah, Stag, I like Stag, Phil. Here, I'll put that up, and then we'll come back to you guys. I'll get to your comments in a second, Casey. Let's look up. Come on, everybody. So I need the traveling music. The traveling music. All right, where are we going? We're going back to the land of Simply Safe Dividends and looking at single tenant acquisition group. If you remember, I told everyone in high school I was called Stag, super tall, athletic guy, but that was a complete lie. Stag 45, borderline safe, and I like them. I think people are a little bit overreacting, thinking that Amazon's going to start pulling out, but I don't believe Amazon is like a major part of their business. So they have really slowed that dividend down, 0.7% growth. Very, very slow lately. They're a dividend achiever, right? 10 to 20 years as an achiever. So I think they hit dividend achiever status. Or is it contender? Some gum. I forget which contender and achiever. Somebody put in the comments. Help a brother out, man. Yeah, they do pay monthly, $1.46 annually. I like Stag. I should buy more. I took a selfie with one of their properties up in Janesville, Wisconsin. But they're not really on sale right now. Everything's pretty much in line with the 5-year average. And let's see. The AFFO, dude, that was really high lately. And we're down to 73%. That's a good trend. I like to see that. Their free cash flow per share and AFFO per share has been ticking up. So I like that. Sales growth is about, that was crazy when I think 2011 or 10 is when they came out. It was really high, but still, dude, mid-teens for sales growth for Stag. That's pretty consistent since 2016. And yeah, they not worried. See, this is one thing I want to point out to anybody watching. What I love to see is REITs are they're kind of designed to increase their shares outstanding because they bring in more money and they invested in more property, which brings in more money. It's that snowball, which you see here, almost in lockstep with the shares outstanding going up, but also the total sales have been going up. And you want to see that. It's only when you see the sales start to level off or come down and then the shares outstanding are going up is when I would start to worry on with REITs. But hey, not bad. 45% free cash flow margin. Not a lot of debt. I like them. I might buy some more. I'd love to get some more of them under, I don't know, maybe $30. So yeah. Now, what we got here? Here we go, Caitlin. Here, everybody get ready to learn about some FRG. Their div policy is to return 25% of EBITDA. What do you think about EBITDA? Wasn't it Charlie Munger that said EBITDA is bullshit earnings? Because interest, taxes, depreciation, and amortization are costs of the business. So why are we factoring those out? I mean, I understand it, but to me, it sounds like a little bit of a financially manipulated number to throw around to people. Margins, keeping that sustainable. Let's see. Oh, okay, cool. FRG was Liberty Tax. Now that sounds okay. The current CEO bought it out, divested Liberty Tax. Do you know what, dude? That sounds like Buffett, right? With Berkshire, that he bought Berkshire, and then they just started putting everything under the Berkshire name. So if I'm wrong, right? I love it. Let's see. Hold on. Let's see. The new CEO took over FRG. Look at I've got a co-host. I just wish this could read and she could talk about it while I sip on my my lemon lime water. What is it? Waterloo. Anyway, the CEO took over franchise group. He Terrible credit rating. I told you, KC is on the ball, man. So he inherited a terrible credit rating, and the only way that the CEO could fund acquisitions was by issuing shares. See, there's a story for everything, and this is why, because I didn't know, you can't just look at the numbers. There's always a story with the numbers, both good or bad. Numbers could look great, and there's a bad story. Numbers could look bad, and there's a good story. So, see, this is somebody that is very familiar with a company, and we're literally all just getting educated on this now, which I love. Yeah, he's making smart buys, growing cash. I may just have to pick up a few FRGs, KC, just because. I think I will. And revolving credit upgrades to avoid share dilution. And let's see. For example, they currently have 500 million share buyback authorizations. That's aggressively utilized. Wow. Yeah, that's, dude, that's, let's see. Just for a sense of shareholder value coming on the pike, FRG, you know, I love it. I love it. She does so much due diligence on these companies. And this is really where, like, people like me aren't always going to find things like that because I'm busy, and buying shares of PepsiCo is really kind of a no-brainer. But you can really find some gems when you dig into companies like this and you put a valuation on it. And I'm assuming you have an intrinsic valuation. Do you want to share that, Casey? What is your intrinsic valuation on FRG, if you don't mind? Oh, dude. All right. I'm going to, hey, Kevin. You're welcome, Kevin. And I got to get to my guy, dude. Freedom Stacker with another $5 super sticker. You know what, man? Let me just say
this. Thank you, thank you, thank you, thank you, thank you, thank you.
Thank you, buddy. Thank you. I really do appreciate that. And it's just so kind of you to do that. I mean, of all the things you could spend your extra money on, you'd want to give some of it to me, which, hey, I'm completely fine with. Whatever you want to say. What do you know? You have, this is Jason. Jason has a YouTube channel called Freedom Stacker, right? I think that's your channel name. So I should link it. When this is over, I'm going to link it below. So if you're watching this, you want to check his channel out. Let me put that there so I can do that after we're done. Here we go. KC, I love it. STAG. They've targeted 80% AFFO payout ratio. May start some really ramp up div growth finally. Yeah, I'd like to own more of STAG, and you know, the more I need to really do a deep dive into them. I did a while ago, and I really need to revisit them and do. I think I need to do a video on them. Just ask, is STAG worth it? Is STAG a good investment? Yeah, always been the biggest knock against the stock. And if you're lazy, EBITDA will get you killed. If you're diligent, it's the best pure meaning of earning potential when evaluating a company, in my opinion. Yeah, and again, Charlie Munger says that it's BS earnings to use EBITDA, or he calls EBITDA BS earnings. But like she said, dude, there's always the more due diligence you do, the better knowledge you will be. So you can never, okay, good. Never stop at EBITDA. You must always follow through to true adjusted free cash flow. Nice. What's my next purchase, or am I monitoring closely? Let me take another sip of the water. The Waterloo. TXN, Texas Instruments. In the taxable, I got 9 shares. I want that 10th, but I'm being stubborn, waiting for it to get back to around 145-ish. Target, I really like Target. I'd like to get Target under 140. And, you know, 3M under $100, I will definitely buy more. I'm currently in the midst of a tax loss harvest with 3M, so I cannot buy any more 3M until, I don't remember the exact date. It's in the middle of November. I've got a few more weeks to go, because if I do, that would violate the wash rule, and the, like, I think it's almost $400 I was down in the taxable on 3M. I sold that. I can claim that against any capital gains I have. So it'll offset at least 400 just in that one instance. But then mid-November, last week of November, if I want, whenever so my thought with that is that other investors toward the end of the year are really going to probably start dollar cost averaging. Let's take a minute, Mr. Brain, and think. What they're going to start doing is tax loss harvesting on 3M. So I think that's going to put further pressure on companies that are already weighed down, like Meta, Google, maybe Microsoft, 3M, all the companies you see that are pretty down this year. I think by the end of the year, they're going to be further down because of the tax loss harvesting pressure. So yeah, I'm watching 3M. I'd like that. And here's KC, the moment you've been waiting for, her intrinsic valuation. She has around $45 to $55, depending on the kind of multiple it attracts for its franchising economics. I feel like I've already just been sold on them. And here we go. In a normal operating environment, she easily values it around 90 to 110, which is awesome. That may be wrong. It may be right, but it's her number, and that's what she's comfortable with. And this is, in a nutshell, like what Warren Buffett does, what a lot of some of the great investors do. They put that number, like with Coca-Cola. By the way, Casey and I were talking, I was going to do a video on how long it took Buffett to be paid back from his first acquisition tranche of Coca-Cola in 1988. And anyway, so he puts a value on it, and the market crashed in 87, if you remember. So everything just went down. And in those panic sell-offs, that's what's awesome. People just sell things, just whatever it is, whatever I got, just sell it, sell everything. And that really puts things at a great buying opportunity. And apparently Coca-Cola went way below his intrinsic value. So he really started buying, and probably his margin of safety. So very interesting stuff. Yeah, Jason, you're welcome. You're welcome, buddy. You're welcome. Let's give him another. Thank you. Another bit of welcome. Thank you. Not welcome. You know what? Hey, welcome and thank you. Let's see. Hey, Jason. Another Jason. This is the all Jason hour. Yeah, I love it, man. I don't mind just popping the camera on. I'm going to look for better topics. I have a sneaking suspicion that the beginning of this will probably be one of my worst ones, but it was just fresh in my mind. It was new. Dividend Dave from the Passive Income Podcast. Again, we had a chat yesterday. And by the way, he put me as Rusty Ram 78 on his thumbnail and title. So that could be a little confusing because that's my Twitter handle. And I don't really go by that anywhere else but Twitter. And obviously my name on here. But yeah. So here we go. More FRG talk. Look what you started, KC. You got the FRG talk going. By the way, KC, who's in the chat, Caitlin Cage, she loves FRG. Did I say FRC? FRG. Oh, Aries. There you go, Aries. We're going to look it up for Jason. Aries Capital is an interesting one that I remember. They are one of the better BDCs, I believe. So let's see what the old Simply Safe, the SSD, gives Aries Capital. Come with me to the land of SSD. He's singing and he's not watching what he's typing. Here, Aries Management gets a borderline safety score of 60. There's a couple BDCs I remember I did a video on way back that I was like, don't buy these, they're terrible. But I don't think Aries was one of them. Let's see. Stupid bubbly drinks. Dividend growth of 18% last. I like it. Let's see their dividend growth. Nice. 16% 5-year CAGR. Very good. BDCs, by the way, what I understand to describe them is they're investing in smaller businesses, right? They're giving them money, getting a position in that company, trying to grow them. That may have been completely wrong how I described it. I don't really play around or invest in BDCs, so I don't really pay attention all that much. But they do every quarter. Looks like they're due for another dividend raise, which I thought I saw them do. I think they did increase it. We'll check that out in a second here. So their ex-dividend date, December 15th. But yeah, they're a little bit below their 5-year dividend yield average, and the PE is pretty much in line. So definitely not on sale. They're toward the higher end of the 52-week range, and their PE comparison, they're a little bit over, but earnings payout ratio 62%. You know, not. I'm guessing they are free cash flow per share negative, which is interesting. Yeah, I don't know enough about BDCs. I know they're kind of like a financial institution in a way, and I get confused with BDCs. So I don't know. I just stay away from them. But their earnings per share $3.91, but there's free cash flow per share of negative $12.40. So I don't know. To me, it looks risky. I mean, I guess toward the higher end, the better end of the risk. And they've been increasing shares, so kind of could be like an FRG scenario. And only 3% return on invested cap. So low ROE, ROIC, 29% free cash flow margin, which is interesting because it showed them having negative free cash flow per share, but I'm guessing they go really heavy with investing, so that by nature is going to be negative because they're using their 71% net debt, and for reference, Simply Save wants to see below 20%. So, not a lot of wiggle room on their interest coverage either. But again, admittedly, I just don't know enough about BDCs. But you know, it looks decent. Oh, I know what I was going to share with you guys here. I'll look. I think they raised their dividend recently. I swear I saw that. Amphenol, Energy Transfer, Visa with a 20. There it is. Yeah, here. Let me share this for you people out there. Ares did increase their dividend. They increased their dividend by 12%. It's their fourth increase in less than 2 years. Yeah, again at 9.80%. They're the largest BDC in America, and they think their healthy payout ratio and strong spillover reserves. Casey probably knows what spillover reserves are. I believe that was, I don't remember, quite honestly. I'd have to Google it. I just don't really pay attention to BDCs that much. Look at that, Visa. But I do know Visa, 20% hike. And only a 0.86% yield on the old Vista. Hey, Kevin's buying more tea. They had a pop, man. That looked nice, right? Well, I wish I was buying more tea now. But now I'm pretty heavy in tea, so I'm going to hang out for a minute with the shares I got. Let's see. FRG is 28.53 to sell and 31.48 ask. So I'm guessing that it's not a lot of trading going on. If that's the spread, dude, that's a huge spread on FRG. So it may not be, yeah. If you would only read the next comment, bud. Yeah, big spread. So interesting. Yeah, FRG is reporting out next week. Yeah, I love it, man. I'm interested. See, look what you started, Casey. It's a small cap average trading volume. Yeah, so interesting. Yeah, it's not very liquid. So that's something to pay attention with small caps, is that they don't, like PepsiCo will have a spread usually of like a couple pennies. Most of the stocks that we'll follow are like a penny, but the smaller the liquidity, and that meaning the trading volume, the bigger the spreads can be. So that's a pretty big spread. And Phil's waiting for now that you could take advantage of that too. You could just put in a buy order at the lower end of the spread, or 50 cents above or a little bit above, and you might get that triggered. If somebody really wants to get out, you're providing that liquidity by offering up your money, and then it's going to be up to them, right? Because the market is all just one big auction every single day. Buyers and sellers. There has to be a buyer for every seller and vice versa. So what was that, Steve? Here. So yeah, if you wanted to, yeah, so the lowest ask is 31.48 and the highest offer to buy is 28.53. So you literally could just go $29, and then the people that are at 31.48, if they want to get out bad enough, then they're going to take you up on that. But it could also take a while to fill. So yes, here we go. Phil up in Canada. He's a francophone, speaks 3 languages. Although he does get Italian and Spanish confused. Phil, it sounds like I'm doing a dating app thing. Also waiting for 3M to drop. He is. and 7% of 3M in his portfolio. He won't invest until it drops under 4.5% of his holding. Yeah, that's good. You know, you don't want to get too overexposed to something extremely risky that I think 3M is. I think they will be fine. But if some negative news comes out about the litigation situation, then they could take a big hit. And I think I'm waiting for that. You know, I'm probably just going to hold off. And if it goes up, fine. I have some shares in the retirement account. But if it gets knocked down under 100, I'm definitely going to be buying. Yeah, Casey says, definitely stick to limit orders when moving in and out of small caps. Don't get lazy with market buys or you can get crushed. That's very interesting. Thank you for sharing that. What you got, Steven? Tax loss harvest, VOO. You know, it's interesting with that. So because they hold so many stocks, I think the only wash rule with that would be like as if VOO is that's the equivalent of like SPY, right? The S&P 500. Yeah, could lock in about 2K, but nervous things will continue to rise. I swear, man, I think we have some more downside coming because of just with everything. I mean, the uncertainty is always on the table. The unexpected is always on the table. And I think that, in my opinion, there's going to be a lot of tax loss harvesting going on this year more than other years. So I think come December, we're going to see a lot of downward pressure on the market. And the shorts could pile in on top of that because they know people are going to be tax loss harvesting. And I could be completely wrong, and we could just shoot up right into the clouds. I don't know. But so look at this. I have not, and I've kind of forgotten about it, but I am going to push it again because I don't want to max out early. So for those of you just joining, I made the mistake, and it's a mistake now because hindsight is always 2020. I maxed out the 401k at work in August, like mid-August. I maxed it out, and I was like, yes, I got a raise. I was happy. And then the market just continued to keep tanking. Well, the problem is now I'm missing out on buying those lower shares. I mean, yeah, at least we're getting distributions, and those distributions are reinvesting. They're dripping at that lower rate, but it's not fresh capital coming in. So I'm hoping that the market continues to go down selfishly until, you know, a little bit through next year so I can start buying in lower. But yeah, I haven't gotten an answer. And again, I think I'm going to let that just, I probably should know, but I'm really going to be diligent about trying to max out maybe in mid-December, you know, just have a little bit of money extra at the end of the year. I'm going to really be diligent about that. So yeah, because yes, that's why. All right, hold on a second. Add it. So bored retiree. Buddy, why are you bored? Do you do anything? Do you have any kind of thing you retired to? Because that's what I read about with a lot of us in the FIRE community that are trying to get there. We're always going to be working. As I recently said on I don't remember who I was talking to, that our minds are made to work. We need to solve problems. We need to be doing things with our hands, whether it's talking and typing or working with tools. We need to be doing something, but we should do what we want to do when we want to do it. Funny. I just set my cup down. I'm like, hey, look at this. It's behind. Look how far behind it is. You'll get a laugh at this. So here we go. Look at this. I'm holding it up. There it is. It's like a 10-second delay you guys are on. But it's okay. It's all good. All right. Anyway, so he's adding, for those of you that don't know, I might be adding, I think I may sell 2 cash secured puts on Realty Income. And that would be 200 shares if it gets hit. I'm looking at under 60, but I want to wait for a red day. I'd love to see it closer to 60. I think, that way, because I'll always have the one, and the other set of 100, I'll just more aggressively sell covered calls on. So that's kind of my thoughts right now. A little thing I might be shifting to is just just doing that because the JPM, if you remember, JP Morgan, I had that call. The shares get assigned. So I had 12,200, which is, basically 200 shares of Realty Income at $60. So I think I may do that. I think I may look at 200 shares aggressively doing 60, hoping to get assigned that. And by the way, the call options on companies like Realty Income are every once a month, once a, I don't know, cycle, would you say? But yeah, I'd like that. I'd like to have almost $50 a month just coming in for holding Realty Income. I think under $60 is a good price for them. I think they're a solid company, not going anywhere. They felt a little bit high when I originally got my 100 shares called away at $72.50. And now I have a chance to buy back in under $60 a share. And Casey says, by the way, 5 more minutes. I'm going to pop on out of here. So give me your parting thoughts, everyone. And, go watch football or something. Have fun with your family, your friends. As I told Harris, buy some silly string and spray it all over your neighbor. I don't know. Anyway, BDCs have to pay out 90%. Yep. They can use spillover mechanics to push out certain portions of income to be paid out in future years. That is right. Thank you. Yeah. This is what I'm saying. I really just need KC as the host, as a co-host, because there's a lot of stuff. It would save us a lot of time. She could but that's fine. I love having you on in the comments and answering our questions, which is why a deceitful CEO at a BDC can get away with murder and propping up bad earnings. That makes awesome sense. So it's almost like, so the spillover is almost like a slush fund that they can use at their discretion, like you just said, to prop up bad earnings, or if you have good earnings, I like that. Yeah, I really know your way on financials and breakdown. And I don't. And honestly, I don't know if I ever will invest in BDCs, because to me it looks like they just look really risky. And I think, right, like market conditions can really shift and really hurt them. But that's what that's what the spillover is for, I guess, like you said. So it can be used for it's like great power, right? They can use it for good or for bad. Yeah, I like shiny things. I love it. Oh, by the way, if you noticed, I limited this to only the what do you call them? The subscribers. You have to subscribe to be able to comment. So no more of the sexbot chat stuff. Sexbot chaps? That's in the future. That's coming. Somebody's going to be building sexbot chaps. You can rent them. Well, I would suggest not renting them. That would be unsanitary. Just buy your own. I read that in Ready Player One in the book. I don't want to give it away. Anyway, it must be the end of the show. We're getting really, really crazy here. Let's see. Phil says 3M's going to suffer until their lawsuits are settled, and he's willing to wait and collect the dividends in the meantime. And so that's my feelings on it. That's what I think. That's what I think I'm also going to be doing. Let's see. I asked for Halloween. He's dressing up as Jim Cramer, so it means you're going to be crying about telling everyone to buy Facebook or Meta, and then it just goes down the crapper. That's from USAF. Okay, cool. Pension number 2. I like it. Nice job. And by the way, thank you for your service in the USAF. I do appreciate it. I love it. What book, Jason? Okay, good. I was hoping you were going to tell us. Yeah. You can't just do that. I read the best book ever. Peace out, guys. We'll see you. The single best investment. Yeah, this thing. Okay. All right. I'm writing that down. I'm going to read that too, dude. And I'll let you guys know. Single best. Did you read it on Audible? By Lowell Miller. Look at me, old school, writing stuff down on pen and paper. What's he doing? Okay. So I'm going to cheers you guys one more time. Next time I talk, Sober October is ending for me. I love it. You can't hear those bubbles. What am I doing? This isn't ASMR. We made it. We made it. Cried about Meta when he gave so much worse advice than that. I don't know, dude. He's losing. He's like a broken clock, just throws out anything. Which 5 stocks are you waiting for to buy? Yeah, so I kind of told this earlier. I'm waiting right now. So I guess Realty Income under 60. Target, I'd love under 140. Texas Instruments around 145, mid 140s. And 3M under 100. So those are 4, and you wanted 5. Procter and Gamble around 100. Procter and Gamble around 100, dude. That's thumbs up. Absolutely. Yeah. And then Casey, I'll end it with you talking about the inverse Kramer, which is the S Jim, right? I think there's S Jim for the short Jim Kramer and L Jim for long, and they just go long and short his stuff. So hey, we made it. We're at an hour. I'm going to cut it off here. I got grass to cut, and I'm going to look for this book because even though my wife says you should pay somebody to cut the grass, you know why I don't want to? A, I love being outside. Two is B. I got the earbuds in. I'm learning. I'm listening to podcasts or audiobooks, so I'm reading. And we will not go because my guy just popped in. Dude, just blowing it up. I love it. He put out a video on SCHD. Ryan Williams here. Check that out. It's been crushing it. I love to see it. And so I was just signing off, Ryan. He gets in as soon as I'm going out. He's out there in the glitz and the glitter of Vegas. And I won't invite him on because I'm going. But I was on his podcast. I was on his YouTube channel last Friday, 2 days ago. So if you haven't, you want something, maybe you can put the link in there, Ryan. I don't know. Can you do that, Ryan? Can you put the link real quick in the here? Yeah, put it in. If anybody wants to watch us chat from Friday night, we can I'll link to it, or they can click it right now. I don't know if there's another way I can do that. I wish I could just put the link. But yeah, if you put it in there, they can copy and paste it, right? We had a fun chat. I enjoyed it, man. So yeah, throw it up in there. Throw it up. Throw it in there, Ryan. Well, I don't know. Maybe he's getting it. We'll give him a second so you guys can click on that before we get out of here. But for Halloween, I am not dressing up. Am I dressing up? My wife's over here. Oh, come say hello. Does anyone want to say hello to my wife? My wife. She just walked in, and look, you're on screen now. Gosh, this is my wife. So she's going to be Chucky for Halloween, right?
Yes, I'm going to be Chucky.
Yeah. So anyway, I don't know, Ryan. Are you putting it up? We're waiting for it. I wanted to put the link to that. Go where? Get the kids? Oh, okay. I'm going to cut the grass in a minute here. So now, you guys, it's like you're in my house with me. You all live with me now. This is where you live now. All right. Anyway, I don't know what Ryan's doing, if he's going to get it or not. But, I could get it. I put it in there, man. I don't see it. You put it in where? I don't know. He says he put it in. But anyway, enough stalling. Yeah, we chatted Friday night, so check it out. I don't see the link. I don't know how. I'm still learning how this jib jab works stuff. So I'm taking my Waterloo and I'm getting out of here. And George, I see you. I see you from Greece, George. I'm signing off, man. I got to get out of here. Why does everybody jump on when I'm getting off? No, I'm not getting off. As soon as I'm about to end the broadcast, people start getting on. But hey, all right, I'm really getting off this time. See y'all. It's above Anthony's comment. Wait, hold on. I gotta see this here. I think it blocked it, dude. At least I don't see it. Yeah, I don't see it. Anthony says got here at the end, so I don't see it. I don't know, man. Clint Danzig. I will. I'll wear my Captain Harlock shirt, the one I wore on your channel. So, all right, guys. Now I'm freaking getting out of here. So, peace out, everybody. And I can't. I forgot. Hold on. I forgot. Yeah. That's it, guys. I guess that's it. So now I'm going. I'm ending this thing, and I will see you next week. So long, everybody.